Many thanks for joining us. Welcome to Business Incorporated. I am Bisi Adebayo. Coming up on today's program, more support for AFDB President Akinwumi Adesina as first ever U.S. representative to AFDB joins Solidarity. And World Food Programme warns more people could die of hunger in Africa over failure to keep food supply chains open during the onslaught of COVID-19. Plus, U.S. government opens fresh investigation against global commodities trader Trafigura. We'll begin with the markets here in Africa. And of course, it's looking like a bright start to the month of June and the new week, as most of the major stock markets we track were all in the green at intraday. Here in Nigeria, the all-share index was 0.43% higher. In South Africa, the JSE index was 1.08% higher, and the EGX 30 was down 0.13% also at intraday, while the Kenyan Burst ended Friday's session 0.45% positive. And the markets in the Middle East were also doing good at intraday, with the Abu Dhabi index up 0.70%, while the Dubai index surged 1.47% at intraday. In Qatar, the index also climbed almost 2% at intraday, and the Saudi index was also up 0.84%. And in Europe, markets are closed in Austria, Denmark, Germany, Norway, Sweden and Switzerland for a public holiday, but stocks in other parts advanced early today as lockdown measures ease across the continent. London's FTSE 100 added 1.4% in early trade, while France's CAC 40 climbed 1.5%, and Italy's FTSE MIB gained 1.3%. Investors around the world are focusing on widespread civil unrest unfolding in the U.S., where hundreds of people were arrested over the weekend as protesters and police clashed in the cities across America after the killing of George Floyd sparked more than 100 protests, rallies and vigils. Also, many European countries are beginning to ease lockdown measures and gradually reopening their economies, a key source of upward momentum for the markets of late. Let's now turn to the UK, where the PMI data for May came in at 40.7, little change from a preliminary reading of 40.6, and far below the 50 level above which the index would signal growth. Let's join Juliana Olayinka at our London studios for more on this. Good afternoon, Juliana. It's good to see you. Now, earlier on, you spoke to Chime about the PMI numbers in the morning. How much of these numbers are feeding into the markets? And tell us what the intraday numbers are saying.
Good afternoon, Bisi. Well, in London, it's so far so good. The FTSE started off at a high and it's regained those gains at intraday. The FTSE all-share is up 1.10%. The FTSE 100 is up by 1.04%, and the FTSE 250 is up by 1.37%. Also, good day for the pound. It's up on the US dollar by 0.32%, up on the euro by 0.26%, and up on the Japanese yen by 0.23%. It doesn't appear as if those disappointing manufacturing PMI figures have rattled its way into the market. It was expected because, of course, there has been a lockdown in this country now for over 2 months, but there is still some concerns about just how much this COVID pandemic is weighing on manufacturing, and that's been highlighted by a significant letter that has been written to ministers by a group that looks after the manufacturing industry, basically asking the government for more financial aid to protect the sector, because there was a survey done last week that confirmed that 1 in 4 manufacturing bosses believe that they would have to get rid of their staff over the next 6 months if this downturn is to continue. So not great PMI, but the sentiment is still picked up, considering that now we're beginning to ease out of lockdown here in Britain.
All right, Juliana, a group of 200 travel companies has written to Home Secretary Priti Patel asking for current quarantine plans for people entering the UK to be scrapped. Tell us what really is their concern about the quarantine plan.
Well, this is a row that's gaining momentum here in Britain. It's definitely been all over the media today, and that's because we know that the lion's share of the issues surrounding COVID-19 has really battled the airline industry. And now, from next Monday, June the 8th, if you are planning on travelling into Britain, you'll be forced into a 14-day quarantine, which is mandatory, and you must self-isolate. So there has been growing calls, not just from business leaders such as as the Dorchester Hotel and other significant hospitality figures, but also Tory MPs themselves. They've been speaking quite openly and saying that Britain were just too slow in doing this. And the fact that they've decided to do this at the peak of the holiday season is just going to cripple what's even left of the airline industry. So they are asking Priti Patel, the Home Secretary, to do a U-turn. Already it cost almost £5 billion, this lockdown, and they say it will just do significant more if this lockdown measure was to continue. So far, a lot of countries across Europe who tried to say that they were doing this scheme have rescinded, and they will not do it, and that's what they're expecting Britain to do over the next couple of days after the Home Secretary is likely to come under increased scrutiny. Also as well, this lobby group, in the letter that they wrote to Priti Patel, have asked the Foreign and Commonwealth Office on their website to stop asking British travellers to not travel outside of Britain unless it's for essential travel. There are a lot of airlines that say they will start opening and operating very soon, including EasyJet. But now British Airways and Virgin Atlantic are saying because of the stance that Britain had taken with travel, they will not be resuming any earlier than August. So it's a pretty fierce argument, and there are hopes that the British government will U-turn sometime later this week.
Juliana, it's countdown to June the 15th when Primark plans to reopen all of its 153 stores in England after the lockdown restrictions are lifted. But the clothing chain says there will be no special discounting for customers. Why is that?
Why is that? I presume it's got to do with the £650 million every month that Primark has lost since it was shut down. They have announced that they will be opening all of their stores across England on the 15th of June, and they've got £1.5 billion worth of goods that have been stocked up that they need to shift. I think it's worth bearing in mind that Primark is one of the most discounted stores on the high street, but they need to try and curtail that money back. The high street in Britain has been suffering over several years, but Primark is one of those very rare retailers that have bucked the trend, and they're hoping by keeping their prices at that premium rate, they will try and climb back some of the money that they've lost over the past couple of months.
Let's talk about Ted Baker founders Ray Kelvin's 35% shareholding in the fashion retailer, which is expected to be diluted after he backed an emergency £105 million fundraising to get the business through the coronavirus pandemic. Tell us what this would mean for the company and its shareholders.
Well, Ted Baker in trouble. They've been in trouble like many high street retailers before COVID-19. And of course, since the COVID-19 pandemic, lots of these retailers, particularly Ted Baker, that is almost an intermediary pricing clothier. They are not necessarily a luxury retailer, but their prices aren't as low as Primark. Now, they just released their year to January trading reports, and they reported losses of over £80 million. And now they have decided that to try and survive post-pandemic, they will need to raise £95 million almost immediately. So what they are doing now is they're offering discounted share rates. At the close of Friday, I believe one share in Ted Baker would cost you about 157 pence. At the moment, you can actually buy a share for 75p, and they're hoping that this will get them through. And they're not the only ones. There are so many other retailers, Bissy, that we've spoken about over the past couple of months that have really struggled over COVID-19. Many of them won't reopen, and it's very likely that many of the big Ted Baker stores will close down, but they want to open at least some of them. And the only way they're going to be able to do this is if they raise this money in quick time.
Thank you, Juliana. We'll see you again tomorrow. Over now to Asia now, where stocks finished higher on Monday as data releases showed China's factory activity expanding in May. Hong Kong's Hang Seng Index led gains, surging 3.36% to close at 23,732.52, with shares of life insurer AIA soaring 5.17%. Mainland Chinese stocks also saw robust gains, with the Shanghai Composite up 2.21% to about 2,915.43, while the Shenzhen Component surged 3.314% to around 11,102.15. In Japan, the Nikkei 225 closed 0.84% higher at 22,062.39 as shares of index heavyweight and conglomerate SoftBank Group jumped 3.85%. The Topix index finished its trading day 0.32% higher at 1,568.75. South Korea's Kospi rose 1.75% to finish at 2,065.08. And reports came in today that the country's exports in May fell 23.7% year-on-year, and that's worse than expectations in a Reuters poll of a median drop of 22.1% year-on-year. Meanwhile, shares in Australia edged higher, with the S&P ASX 200 closing 1.1% up at 5,819.2. Meanwhile, U.S. stocks futures pointed to a slight fall on the first trading day in June, with Dow futures implying an opening loss of about 24 points. The S&P 500 lost 0.2%, while Nasdaq 100 futures were down as much as 0.5% and then 0.29% earlier. The S&P 500 and Dow each gained at least 3% last week, while the Nasdaq Composite advanced 1.8% to close out in May. And those gains were propelled by increasing bets by traders that the global economy will successfully reopen after the coronavirus forces a shutdown of most economic activities. Let's take a breather from those numbers now. The first ever U.S. representative to the African Development Bank, Ambassador Harold Dolly Jr., is asking the United States Secretary of the Treasury, Steve Mnuchin, to continue to support Africa, the African Development Bank, and President Akinwumi Adesina in his bid for re-election. Dolly Jr., in an open letter, describes Adesina as a global player of impeccable character who has mobilized billions of dollars for Africa and helped accelerate the continent's development. It maintains that the Executive Committee of the African Union, on this premise, unanimously endorsed Adesina as the sole candidate for the re-election to a second term. Adesina is under probe over allegations of corruption barely 2 months before he is expected to be re-elected on a post at the bank's annual general meeting in August. The World Food Programme has warned that failure to keep food supply chains open during the onslaught against the coronavirus pandemic could result in more people dying of hunger than the virus itself. During a 4-day trip to Africa, the executive director of the WFP, David Beasley, told journalists that there are already grave problems distributing food because of curfews, long delays for truck drivers at border crossings, and mandatory quarantines affecting pilots. The WFP chief is calling on governments to more carefully review whether all the restrictions are needed. In April, the WFP said the number of people facing acute food insecurity globally could nearly double this year to 265 million due to the economic fallout of COVID-19, and most of those people reside in Africa. OPEC Plus says it's set to discuss a short extension of its current output cuts, as well as moves to bring forward its next meeting a few days to June the 4th. According to an OPEC Plus delegate, the cartel and its allies are considering extending the current cuts for 1 to 3 months as the situation in the oil market is moving fast. And the preference is to take short-term measures and not disrupt the rebalancing of the market. The existing deal, which was struck in April due to a collapse in energy demand and prices caused by the coronavirus pandemic, calls for output curbs to ease from July, while the cartel adds that it will be discussed at the next meeting. Meanwhile, global benchmark Brent crude is recovering from some of its earlier losses with a 0.24% gain as traders hedge bets with OPEC considering a meeting this week to discuss whether to extend record production cuts beyond the end of June. Brent crude was trading at $37.89 a barrel after shedding more than 1% in early trade. The U.S. WTI crude futures for July delivery were at $35.21 a barrel, down 30.79%. Meanwhile, sources say Saudi Arabia is proposing to extend record cuts from May and June until the end of the year, but has yet to win support from Russia. Still to come on the program, a look at the implications of higher inflation on sub-Saharan African economies. Please stay with us. Welcome back. Several sub-Saharan African countries have recorded a spike in their inflation numbers lately, mostly driven by the effects of the COVID-19 pandemic. But what are the implications and the outlook for inflation across the region? The senior analyst for sub-Saharan Africa at Docker Frontier London, Matt Kinniger, joins us now to answer these questions. Good afternoon, Matt. Thanks for joining us. Apart from the effects of COVID-19, what other factors have pushed these countries to get the largest increase in inflation rates in recent months?
Well, good afternoon. Thanks for having me on the show. Yeah, so COVID-19 has played a big role in terms of economic disruption, but we've also seen the effects of quite significant currency depreciation across sub-Saharan Africa. So a number of currencies, for example, the Congolese franc, the Ghanaian cedi, the Angolan kwanza, and even the naira have all fallen to record lows against the dollar in recent months. And so this is pushing up the price of imports. Many countries are dependent on imports for certain categories of products, including food. So this really is driving up the rate of inflation across a number of countries in SSA.
How will businesses be impacted by these inflation trends?
Yeah, so this is a really interesting question because for a number of years, so the last couple of years, many African countries have seen a steady decrease in inflation. And this has meant that businesses, and this is an environment to which businesses have become used. We've seen a number of companies get quite excited about increasing purchasing power amongst their customers. But this spike in inflation or this increase in inflation is likely to undermine customer purchasing power quite significantly. So companies will face a choice really between limiting price increases to protect their market share. But that will mean that their margins will be squeezed, or if they want to protect their margins, they may be forced to increase their prices, but this does mean that it comes at the cost or the risk of customers buying less of their products. And bear in mind, this is all coming at a time when customer demand overall is a lot weaker because of the COVID-19 pandemic.
Just before I let you go, give us the outlook for inflation and what it means for monetary policy in the coming months.
Yeah, so across sub-Saharan Africa, we are expecting inflation to rise for much of the rest of the year. So inflation will increase before it falls. And this is again because of continued currency depreciation. We expect many more months of currency depreciation in the major economies across sub-Saharan Africa. And there will also be lingering effects of the COVID-19 pandemic as well. And this means that a number of central banks will really struggle to find room to cut interest rates. So we saw an interest rate cut in Nigeria last week, but we think this is a bit of an exception. Most central banks will really struggle to justify interest rate cuts when inflation is rising and currencies are facing downward pressure. I would note, however, an exception is South Africa. South Africa's inflation rate is actually expected to remain quite low over the next couple of months, and this is because of very weak aggregate demand, especially from the manufacturing sector. So a bit of a divergence there for South Africa, but overall much higher inflation for much of sub-Saharan Africa in the coming months.
Many thanks. Senior analyst for sub-Saharan Africa at Docker Frontier London, Matt Kinniger. Thanks for speaking with us on the program. Well, the U.S. government has opened fresh investigation against global commodities trader Trafigura for alleged corruption and market manipulation relating to oil trading. According to the Commodities and Futures Trading Commission, a large pool of people have been issued subpoenas ordering them to hand over all information they hold relating to the company's activities dated back at least 4 years. The investigation is understood to relate to Trafigura's oil trading division, which is based in Singapore, but also has offices in London and Geneva. The U.S. probe comes nearly 18 months after Trafigura was named in Brazil's vast car wash corruption probe alongside rival commodities traders Glencore and Vitol. In other stories now, the small mountain kingdom of Botswana's economy will likely contract by 6.7% this year. Of course, that's due to the coronavirus pandemic. The country's government says the pandemic has forced it to divert and realign its budget to address the coronavirus challenge. The fiscal deficit is set to widen to 9.1% from 4.3%. The landlocked Southern African nation, formerly known as Swaziland, was among the last in the world to record a COVID-19 death in late April, and it has now documented 279 positive cases with 2 deaths. Most of the country's 1.5 million people eke out a living as farmers or migrant laborers in neighboring South Africa. And in Rwanda, the government is projecting a huge decline of $100 million in revenue in the 2020-2021 fiscal year from $1.6 billion to $1.5 billion. The country's finance minister says this is as a result of the COVID-19 pandemic, which has halted the economy since March. The East African nation generates its tax from travel, hospitality, entertainment, and tourism, which have all halted, while disruptions are also felt in supply chains that support export in mining, agribusiness, and textile. Non-tax revenue is also expected to decline to 184.3 billion Rwandan franc, and that's equivalent to $197 million. Let's check out the prices of gold now. They're actually higher today as riots in major cities rattled investors already reeling from strained U.S.-China relations and boosted demand for the safe haven metal, with a weaker dollar lending further support. Spot gold gained 0.8% to $1,739.75 an ounce, while U.S. gold futures ticked up 0.1% to $1,752.60 an ounce. Elsewhere, silver jumped 2% to $18.20 an ounce, and that's its highest since February the 26th, before retreating slightly to trade 1.8% higher at $18.16 an ounce. Palladium rose 0.7% to $1,958.25 an ounce, and platinum declined 0.3% to $835.56 an ounce. And Kenya's revenue agency has issued a proposal seeking to tax online taxi hailing platforms, streaming sites, and subscription-based digital newspapers who provide services, in addition to a 1.5% digital tax on the value of online transactions introduced in the Finance Bill of 2020. Companies such as Uber, Google parent Alphabet, and Netflix will be expected to pay tax cut for services rendered and paid for in the East African nation. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.